Good question. I mean, having said I don't really go into the sort of tech stock space, there's something that's really caught my eye from the UK, which is almost unbelievable, but it trades on the AIM. It's pretty small cap company. The company is called Celebrus, ticker symbol CLBS. It used to be called D4T4, as you reminded me earlier, Steve, which is a terrible name. Celebrus is an okay name, but it's infinitely better than D4T4. Celebrus is also the name of its pretty much only product here. But anyway, it's a software product, and it's something that businesses basically install on their servers, and it allows them to, in ways that are entirely data compliant and so on, track what their users are doing on their either website or app. So when Steve's doing his banking, if Monzo have Celebrus installed on there, they can see what he's on, what he's looking at, how he's moving around, and so on and so forth. If he's trying to book a flight through BA, they can see where he's looking, what he's when he's looking for, how long he spends looking at various different things, and importantly, things like, say, when he decided he wasn't going to book this, when he abandoned his basket along the way. Was it because he saw there were booking fees and that he'd have a check-in fee, and then he thought, never mind this, I'm going somewhere else? So likewise, if he's reading his kind of insurance documents, they can see how long he spent reading his fraud thing and so on. The important thing about Celebrus and what sets it apart from other products that let you do the same thing, twofold. One is it does it in real time rather than a few hours later, which makes a difference in the fraud protection division, seeing what your customers are doing live rather than finding out 3 hours later that they've done it. So the idea with bank fraud is either someone is making you do something or someone else is in your account doing something, but either way, there's unnatural activity going on there. And being able to see that as it's happening and do something about it rather than 3 hours later or days later in some cases is helpful. And the other thing about it is it doesn't use cookies, and that makes it harder to block via ad blocking stuff. So a lot of things that do that have do it via cookies, but you can get around those a bit too easily, which ruins their effectiveness. Their technology for cookieless approaches to this is patented. By the way, it's patented for about another 10 years or so, and I think this is a reasonably sticky kind of product. So they've got 10 years or so to sign people up to their software. They've moved to a subscription model since, forgotten exactly, 2020 or 21, something like that, and so revenues took a bit of a dive around there as things move to recurring revenues rather than one-off permanent licenses. Anyway, this is the kind of company that we talk about a lot more, not necessarily at this size. It has a market cap of about £97 million, but not this size, but this kind of business is what we talk about a lot more in the States, with things like recurring revenue and software and subscriptions and so on and so forth. And I suspect it's the kind of thing that the UK market is apt to either ignore or misunderstand or various things like that. So I wonder how well this will actually catch on with investors. But their most recent set of results look pretty good. Annual recurring revenue, they report this in dollars, annoyingly, because most of their revenue comes from the US, but the share price is in pounds because it's traded on the AIM, and I don't like that shift they've just gone to reporting in dollars. But anyway, recurring revenues or annual recurring revenues are now, they're up about 25% in their most recent report. It's somewhere slightly north of 20.2 million. They have their revenues, total revenues are a bit higher because they have some legacy companies that they provide hardware for as well. But most of their revenue now is software, and it's sort of 20-ish 0.2 million. Worth noting that they have a $25.9 million net cash balance, so knock that off a market cap of about £97 million, and well, take it from me, it gets you to about 77 million quid. So 3.5 or so times sales. Well, no, nearly 4 times sales, call it that, or 4 times recurring sales. The big thing that impresses me the most, I think, about them is that they are signing up clients all over the place. I mean, it's got very, very pale shadows of Palantir about it. And when I look at Palantir's reports and they say, we've signed up a bottled water company and an ag tech company and a company that does all kinds of other things, a pet food company and so on. These guys flag in their report they've signed up a global airline, a Polish bank, a UK energy company, a US healthcare firm. They appear to be able to find uses for this all over the place for people. Big total addressable market, growing fairly well, strong cash position, dividend yield, forgot there was a dividend, yield of 1.3%, but growing, I think. And one of the things that you don't see so often with this type of firm is they have been doing a buyback that's just offsetting stock-based comp, but their stock-based comp is not crazy over the last 10 years. You tend to find with these small growth things, haven't got much cash, so we send it out in shares instead. But actually, as I saw it, the share count is going higher, but it's not going mad higher over the last decade or so. I thought this looked kind of interesting here, Steve. Things we usually look for in a software growth stock. On the UK markets, I wonder whether anyone's ever going to pay attention to this thing.
Yeah, it's really interesting, Steve. I mean, if you wanted an indication of the quality, they're integrating at the moment with Salesforce, Adobe, Dell, Quantexa, SAS, and then I noted some other big names in here as well. There was Braze, which is a big marketing platform now, Snowflake, obviously, which we've talked about a lot on here, um, and SaaS as well. So some really interesting integrations with some really big companies. So they're obviously seeing some, some reason to bother letting them integrate here, Steve. I think, and interesting to see that that's what they've done. Looks like a pretty strong balance sheet, as you were saying. I know we don't like to highlight that this early on, Steve, but looks like they're in good nick. Can see as well that you pointed out to be beforehand. Just have a look at the share price, and obviously back in the 2000s they had their own little .com spike, but they're one of those companies, Steve, that have actually gone on to exceed that .com spike. They got ahead of it in 2021. They're about 50% higher. They're a little bit lower now, but not by much. Yeah, it looks really interesting to me, Steve. I've never heard about this company before. Where did you come across this one?
A bit of spying through some interactive investor stuff. There's someone there who takes a good look at quite a few AIM companies. He thinks this looks expensive. I think I can see why he thinks this looks expensive. Compared to everything else that's a UK industrial thing and trades at about 17 times earnings, this is expensive. But I was kind of gesturing for you. They report what they consider to be their key metrics, and I think it's actually a pretty sensible set of key metrics that they keep on their website. Their annual recurring revenue is growing actually pretty smoothly and looks like it's on quite a nice trajectory there. And at 26 or so times earnings, I don't think it takes a huge amount more to see this as trading in a sort of reasonable-ish area. So yeah, I'm interested in a closer look on this one. I sort of wonder whether it doesn't look like an obvious acquisition target to me. It looks like it's priced sort of reasonably, but I am hard to find much to dislike about this in my case. I mean, it is small and it's up against bigger competitors, is I guess the main thing, but it's got a good product and it's patented and so on.
Well, it's a peg of one, isn't it? Essentially, at 20 to 25 times end, it's essentially growing around the 25% mark. So, a little bit above a peg of one. So it's not that high. What's jumping out to me, Steve, is this part here on tag-free data capture. So Celebrus's CDP captures data without relying on traditional tagging methods, making it easier to implement and maintain. That's essentially one of the things that Trade Desk has been doing. Trade Desk, and obviously in the US has a 30 odd billion valuation. But yeah, it's basically like a cookieless way of tracking people. And it's one of the solutions that Trade Desk has invented and successfully implemented as well. So interesting to see we have a company over here doing it as well. But there's all sorts of interesting things like behavioral biometrics to identify and authenticate users based on how they behave online. Real-time data streaming as well, so you get the data all back to you as it's happening, so you can act in real time. But also, this AI fraud prevention solutions, and again, teaming with this behavioral biometrics bit. It's a really interesting looking businesses, Steve. With some, I mean, I've never come across it before, but they've got some very interesting products. Some products over here, which in America are trading for hundreds of billions and 20s of billions. So obviously not in the same league just yet, but would be interested to see where these go from here.
Yeah, and it pays a dividend as well. That's sort of my general vibe on this. I was kind of more, it's more obvious to me, and I'm not a specialist in this sector, the use of this in fraud prevention rather than sort of retail optimizing and that kind of thing. But they do have some impressive stuff about building kind of biometric online profiles and that sort of thing, which and they are, in fairness, they're recruiting customers that are not banks and insurance companies and so on. They're recruiting people who think this might be genuinely useful from a sales perspective.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.